All right, everybody. Stocks by the numbers. Welcome back. Quick update here for SoundHound AI Incorporated. Ticker symbol SOUN. Listed here on the Nasdaq. Stock closed 463, down 5 cents, down 1% on the day. And everyone, just like with Fubo, is wondering, hey, markets are up. Stock I'm holding isn't doing much. Well, in all fairness here, looking at the technicals, we did speak about this kind of long-term symmetrical triangle that we were in. And you can see that if we zoom in here, you can see multiple bounces trying to get up above the top trend line here of this triangle. And then you can see the drop back in. And then it looks like it tried to rally up here to this purple trend line and now pulled back near the apex. Look at the tightening taking place on this stock though. And usually we know when we get this tightening as we approach the apex of a triangle, that's where a break is going to happen. Now, of course, it could break either up or it could break down because symmetrical triangle isn't necessarily a bullish or a bearish indicator. So unfortunately, anything can happen, and you can potentially see a breakdown here to about $3. If it really wants to, it can drop all the way down to this trend line and then potentially bounce and run back up near that apex level going into these earnings due out roughly the first week of November. We're looking for a loss of 7.4 cents a share. Revenue now jumping up to that 20 plus million milestone. We're expecting a little over 23 million for the quarter. They recently acquired that Amelia company, which we know is going to help them expand into the healthcare sector. So now the company, again, fast food. We're in healthcare. We're in automobiles. So that's why when I read some headlines here, as of late, I just have to laugh, okay? Jim Cramer says he's buying some Target, but dismisses SoundHound AI as, quote, meme stock. SoundHound is a meme stock? I must have missed the memo, right? That's just me. That's the way I'm looking at it. In my opinion, this thing is going to be absolutely massive. And from the fundamentals, of course, you could make the argument that the stock could be viewed as overvalued. But notice, it's very interesting though. Notice that it's usually the people online who missed it, right? Because as you know, of course, shout out to me and the crew here on the channel, because of course we started looking at SoundHound at like $2. So see, they missed the rally, right? So they're already paying over 100% more than where the stock was. So everyone who's saying that it's overvalued in the numbers, I laugh for two reasons. Because number one, all of a sudden, fundamentals mean something, right? People always jump down my throat. Oh, you got that dinosaur mentality. No one looks at fundamentals. It's all about technicals. You don't understand the vibe of the market. Okay, fine. We talk about SoundHound. All of a sudden, it's about fundamentals, and the stock should go lower, right? So that's BS. But number two, of course, remember, these are the people who missed it, and they want to own it. So yes, they want to make the argument that, oh yeah, at 463, it's no good. Oh, if it tanks down to that trend line at $3, I'd be all over it. Yeah, of course you would. Because realistically, you know it's a buy even up at the fours. But you're obviously looking for the best possible entry. But as we mentioned, you may have missed it off of that initial news announcement of NVIDIA having a stake in SoundHound. So that's why I just have to laugh at some of the stances that some people take on some of the stocks we look at. See, a meme stock is something like ASTS, right? That technically only did a couple of things, and I'm not saying they're bad things, but the stock shouldn't have gone from 2 to 40. I mean, we have to call it like it is. So, that's a meme stock. But right now we can see that we come down to SoundHound is a, quote, meme stock, it loses money. Well, there's a lot of companies that are losing money right now at the moment. Not every company is net income positive and profitable. So just because it's losing money, it's a meme stock. So this is interesting. But again, I know some people don't really give a crap about what Cramer has to say about some of these stocks. And I know some people even joke about it like, oh, he said he liked this one, so I'm going to short it. Oh, he doesn't like this one, so I'm going to buy it. So it's just laughable that, again, at the time of this article, we are tightening and we are right near the apex. And again, we said we can, of course, break up. We don't have to break down. We can break up out of this triangle. We can run back up to $6, $7. So it's just very interesting to me at the timing and the terminology used to describe SoundHound. And as it's potentially about to break out, all of a sudden, Cramer wants to label it as a meme stock. Oh, it loses money. Hey, so does ASTS, but it went up 2,000%, right? So that's what I mean. These same people who will make the argument for the ASTSs of the world, the Rocket Labs, or even Palantir, right? Palantir just keeps going up and up. People saying, oh, it has to retest that all-time high of 45 or whatever. Yeah, no, it doesn't. No, it doesn't. And people always want to tell me again, it's not about the fundamentals. Stop looking at the numbers. Look at the technicals. Okay, no problem. Palantir was overextended and it has a 70 plus RSI on both the daily and the weekly. So according to your bread and butter, the technicals, that stock should have went lower today. But of course, it's up another 3.5-4% because why not, right? All we have to do is get it trending online and the stocks just keep going up and up. But I just laugh here. Again, I'm not necessarily trying to beat up, the ASTS gang or any of you guys who are pumped about some of those stocks. I'm glad everyone's making money. But I'm sure you can understand my point. The fact that SoundHound is labeled as a meme stock because it loses money is absolutely laughable. And again, the timing of the article and the labeling of the company coming out right at the tightening and the apex of this triangle that we've been watching. Meanwhile, just a little over a week ago, SoundHound AI maintained buy at D.A. Davidson, maintained with a $9.50 a share price target. Stock's at $4.60. But, it's a meme stock, right? You just have to laugh. Maintained price target, $9 a share by Wedbush. SoundHound, price target, maintained $7 a share by H.C. Wainwright. But it's a meme stock, right? But it's a meme stock. It is absolutely laughable. 1.66 billion market cap. Again, we look at the revenue. Oh, they're bringing in whatever, 80 million, 100 million for the year. Could it be viewed as overvalued? Yes, of course. But again, as we said, because markets have been pumping so much and these stocks just run for random reasons, really, at the end of the day, you could probably make the argument for like 95% of publicly traded companies that are overvalued in the numbers. But we know that technically these stocks trade on future growth, future potential, and what can eventually materialize into revenue and, profitability moving forward. And that's why I think that all these analysts are still pretty bullish on SoundHound. Because I think they see the writing on the wall and they see that even over the next 6-12 months, the company, chances are, is probably going to keep signing new clients, keep signing new contracts. They're slowly going to have the revenue start ticking up. Again, they just acquired that Amelia company. Now we're in the healthcare sector. So that's why I feel like these analysts see what's going to happen. And even if we do have a random break back down to 3, and then we slowly bounce and run back up, I'm pretty sure, again, in my eyes, they're seeing the writing on the wall. They're looking a year or so out, and they're saying, no, this stock really should be $6, $7, $9 a share. There's more value here than people may realize. So I have to give credit where credit's due for those analysts because they are staying pretty bullish on it. The losses have been slightly wider than Wall Street has been expecting. You can see 4 misses in a row on the EPS side. But again, I said, in my opinion, it's more about the revenue here with the company in the state of infancy as opposed to the profitability side. Because chances are, as long as the company keeps doing what it's doing, yes, it may take, a year and a half, 2 years, but chances are, in my opinion, they will eventually be profitable. So right now, what you want to see is the revenue beating, which is basically what we've been seeing for the most part. We're coming in more times than not above analyst expectations. Here was a miss on the top and bottom line. Very slight miss on the revenue by about 3.33%, but they did technically kind of come close and got above that 17 million mark. But this stock continued to go higher after those earnings. A lot of people think it's because of those numbers. And I mean, not the worst numbers we've seen, but also, again, this was the initial pop coming out of the news that NVIDIA owns a couple of $1 million, I think, just a couple of $1 million worth of SoundHound AI stock. And they invested into that company. I think it was back in like 2017 or something. So that's why we had the pullback when the numbers came out, but then the stock bounced and took that next leg higher to above 10 on that NVIDIA news. And since then, we've been tightening here in the symmetrical triangle. So, of course, I will say this. We can break either up or down. Obviously, if we see a miss on both the top and bottom line here, the stock will definitely take a hit. In my opinion, though, I mean, again, anyone who wants to make the argument, oh, Palantir deserves to be up here. Rocket Lab is going to go to 20. ASTS deserves to be $7 billion market cap. All of those people will try to fight me tooth and nail when I say there's potential here with SoundHound. So, this is why I say, in my opinion, I like to look at the numbers because it blocks out a lot of the noise. And it just makes it much simpler for you to remember why you invested into a situation and what you're looking for down the road. But if we look at the forecast of the company, this is what I mean. This is why I have to laugh at Cramer for him calling this a quote-unquote meme stock. We have 7 analysts currently covering this position. 6 are giving it a strong buy. 1's giving it a hold. Average price target, $7.79. Lowest price target on record right now is $6, which is almost about a 33% gain from current stock levels. And you call this a meme stock. That is laughable. So again, the revenue hitting more times than not. It's been growing very nicely here year over year. We're up into the 8 figures here. As you see, we started out back at 6, back at 9, 8. Now we're up into the teens. And of course, next quarter up to 23. Looking to close out the year with Q4 revenue estimates of $34.5 million. So we'll see how they report these earnings in roughly 3 to 4 weeks. And then we'll see if there's any changes in guidance moving forward. But all these last couple of quarters, they've been maintaining their guidance moving forward. So they haven't lowered it. So there really doesn't seem to be much of red flags here, in my opinion. Revenue expecting to almost double here year over year. 23, they brought in a touch below 46 million. For 24, they're expecting over 80. 25, over 150. So the growth of the business may really start to snowball over the next year or two. And then, of course, once we hit this point, as the stock starts climbing, probably back up to 6, 7, 8, in my opinion, then everyone's going to say, oh, have you seen SoundHound? SoundHound's looking good lately. And then you're going to see the dumbass headlines of the articles. Oh, SoundHound's been up, the 38% year to date. Is it a buy now? Should you add it to your portfolio? As we always say, Johnny come latelys. They don't want to talk about it when it's at 2, when it's at 4. They want to keep the spotlight off of it. Let the company keep signing contracts, keep growing their revenue, and then when it rallies and explodes 100+%, then they want to bring it to the public's attention, and they want you to sit there and contemplate, should I jump in now? Is it going to pull back? What should I do? Well, if you watch my channel, you wouldn't have to worry about any of that because you learned about it back at $2 a share. But the EPS here, again, I understand the company's operating at a loss, but again, about 90% of the companies that people get trending on Wall Street bets are kind of trash fundamental companies that are operating at big losses and whatnot. So this is what I mean. It can't just be because what you want to get trending or what you want to buy is the exception to the rule, to where, oh, don't look at the fundamentals. No one looks at those. Or, yeah, the technicals don't make sense, but it's trending. It's going higher. You just don't understand. No, I do understand. The problem is you all don't understand. And a situation like Palantir is a perfect example. People tell me all the time, it's all about the technicals. Well, the technicals said it should pull back, but it's up. So when we're talking about something like a SoundHound, when I come out and I say conservatively, this is like a $7 stock, $8 stock, in my opinion, that is being very conservative, and that is looking pretty short-sighted just over the next 6 to 12 months. Because if we're looking at the next 6 to 7 years, then in my opinion, this is going to be a $20, $30 stock. And everyone's going to look back a couple of years ago where we are now, and they're going to say, wow, this thing was down sub 2. Look, here it was 2.5. Even when it popped, it was only sitting at 4. Right now it's at 22. That would have been a great play. I'm telling you, in my opinion, as long as the company keeps doing what it's doing, the stock should be more than fine. look at the tightening of these Bollinger Bands. But again, we randomly get an article labeling it a meme stock. Very interesting. Bottom Bollinger Band 456, top Bollinger Band 503. That's less than a 50-cent swing. It's about a 1% swing. Oh no, excuse me. It's about a 10% swing from 460 to 503. But we have our 200-day moving average also, potential support level. You can see, look, the stock jumped right up to the 200-day. Then we got the Nvidia news, so we exploded. And we've been tightening in this triangle ever since. But the stock has not even come close, except recently now, to retesting this 200-day. But the 200-day went from sub 250, now it's almost at 450. So technically, this is what you want to see. It's what I want to see anyway, when I look at a stock. And you can see how flat the 50-day has basically been, and how the stock has been fighting to stay above it. But the 50-day right now, 480. In my opinion, the stock, again, with markets just running and raging consistently, there's really no reason why this stock shouldn't break to the upside as opposed to the downside. But again, anything is possible. MACD completely flat here. Obviously, if we have a big move up, we're going to cross to the upside. If we have a breakdown, then we're going to start slipping, and that's going to add to the sell-off. RSI seems pretty low here at 44. Switch over to the weekly. And we can see the 50-day moving average again, basically from that same point. You can see it was sitting at about 2.5. Now it's above 4 on the 50-day on the weekly. So we're making these higher, quote-unquote, newer support levels for the stock, which is why I don't know, even if it does break to the downside, I don't know if it'll completely break all the way down to this trend line. It might break down to like this previous low here of like 395 and then bounce and get right back above 4 going into these earnings. So we can potentially see a breakdown, but in my opinion, it really shouldn't be too much. RSI middle of the road here on the weekly, sitting at 50. Top Bollinger Band 570, that would be a nice breakout. Bottom Bollinger Band 382. And you can see that the MACD crossed to the downside, looks like right after we started April, and we've been dropping ever since. So we can be due, as you see here, you can see as well, this time the year before, we had a big drop with the stock, with the MACD, and then we had the cross to the upside, and then we had our explosion. So, of course, the old saying is, past performance does not dictate future results. So we really can't look at this and say, oh, it's setting up again. However, in my opinion, I think I make a pretty strong case for SoundHound. And again, I hate to beat everyone up, but just remember, anyone who's going to like jump down your throat in the YouTube comment section, if you say you own some shares or you like it, you're holding long term, and they say something like, oh, you're a fool, you don't know anything, the stock's going to crash. Just remember, those are the people that didn't know about this and came to it late and are waiting for it to crash so they can buy it themselves. Because if you look at the actual business and the growth potential, it can't be denied. So if anyone's really going to bash this company, in my eyes, it's because they missed it. And they don't own it. Because you've seen some nonsensical back and forths I've had in the comments section even recently with that Rocket Lab video. And everyone wants to say some stupid shit and act like they know something that someone doesn't. But all you got to do is ask people, wait, you own it, right? Wait, how many shares do you own? Then all of a sudden they don't want to talk about it. They don't want to disclose that. Oh, that's none of your business. Oh, let's look in 3 months. Let's find out what happens. Exactly, right? I wouldn't answer me either when I ask how many shares you own. I wouldn't answer me either. Because, of course, the answer is you probably own thousands of shares. You probably bought into something at Rocket Lab at like 7 and change. Now it's at 9. So, yeah, of course you want it to go higher. You want it to go to 12 and 15 so you can make even more money. But again, the numbers don't matter. But with SoundHound, they matter. So this is why I say, again, in my opinion, try to take a step back. Look at the big, broader picture, try to see the writing on the wall, and try to see where the business and the stock can be 1 or 2 years from now. Because the fundamental argument, I'm sorry, it's going to be very hard for you to win a fundamental argument with me on SoundHound, whether the stock is overvalued in the numbers or not. Because again, it only matters in this moment. And when I would look at fundamentals on any other stock you guys like that are trending, you always try to tell me that the fundamentals don't matter. So when it comes to a stock like SoundHound, why are you looking at fundamentals if they don't matter? Because you missed it and you want to buy it back at $2.50, $3. And you may not see that price again. That's why these people all of a sudden want to talk about the numbers. But analysts like it. I like it in the technicals. I do still like it in the numbers, believe it or not. I mean, I know, again, 1.6 billion. We look at the money they brought in last year. Nothing too impressive. But at the end of the day, you know, people always try to tell me, oh, you don't understand, you don't get the vibe. Well, I do know that we've been on a massive AI hyper-demand surge, and chances are it's probably slowly going to take over. Many businesses, many services are going to probably slowly shift towards AI. And this is a voice AI company that apparently NVIDIA supports. And again, the CEO said, I remind everyone, the CEO said they were approached multiple times in the past. Which is why I said again, even looking at the numbers, this is coming from me now, even looking at the numbers may not be the way to analyze this situation. Because we're dealing with something that may see such a surge in demand for their services that the stock is either going to rally up or the company may start to get involved into a bidding war, and you may have whoever, NVIDIA, Apple, Google, everyone may start throwing their hat into the ring. Oh, I'll give you $7 a share. Oh, I'll give you $9 a share for the company. And in my opinion, I think that's what's going to happen over the longer term. But I just wanted to make this video because, again, just like we did with Fubo yesterday, I know a lot of you wanted a little update. And, you know, you see markets go higher, and you're wondering why your positions aren't going higher. Just remember something as well. Let's look at something like a SoFi. You guys remember SoFi, right? Of course, this whole descending wedge I spoke about, and I said the breakout was probably going to be inevitable. The stock was down here in the low sixes, hitting new 52-week lows. I was seeing really, really stupid comments like the company's going out of business, or they're done, they're cooked, as the kids say. And of course, the stock went from lows of 612, 615, and now it's above 8.5. So this is why you have to block out the noise from other people. We know what we know. And SoFi, again, perfect example. We saw the wedge setting up. We had earnings coming out. And I personally was pretty confident that it was going to pop up out of this wedge. And I mentioned it in the Discord, and I even tweeted it out on X, talking about the trade, and the stock immediately breaks out and jumps up to $8. Again, that's just a short trade. And then, of course, it retests, but over the months, now you're up, and you're back up to $8.59. So whether you wanted to trade it or invest into it, it was the right call. But what do? They bore you with these stocks sometimes. And unfortunately, it works like a charm. Because the whole time I was talking about it, again, and I'm not trying to beat anyone up, because of course, if the stock broke to the downside and they missed earnings by a mile and we were sitting here at $4 a share, then of course those original people would have been correct, right? The company's struggling, you know, maybe they are overvalued, maybe they do have tough times ahead. Boom, the stock dips down to $4. It's at new 52-week lows. Okay, those people were right. However, that's not what we saw here. But the main point is not whether, I was wrong or they were right or they were wrong. That's not the point I'm trying to make. The point I'm trying to make is it went from such a hot stock right before the ball dropped to a quiet little church mouse just running around, staying out of the spotlight. All of a sudden, reports come out saying people, oh, I don't like it as much as I used to. The stock drops to new lows. You see headlines, oh, SoFi's at new 52-week lows. This analyst says we could see $5 a share, right? They take it out of the spotlight. They get you bored with it. The stock does nothing but drop and consolidate for 6 or 7 months. And then it's up 33% and you missed the frickin' boat. And this was an all-you-can-eat buffet at $6 and now it's almost at $9. And apparently, them doing that works very, very well. Because again, the whole time here that I was talking about it, I was looking at it, I had a bunch of people on YouTube and in the Discord alike, there were a couple of people, but a lot of people were saying, I think it's done, I don't know if I can trust it, are you sure? You see a wedge? Like, yeah, I'm sure I see a wedge, look, it's right here. But it was the uncertainty, right? That's the point I'm trying to make. They keep the stocks down. They keep the stocks quiet. You lose interest. You lose faith. You lose confidence. So you don't play it. You don't invest into it. And then, a couple of months later, everything's fine. Stock's back up. And, oh, man, just imagine if you bought in here and then sold here. Holy crap, you would have made so much money. So this is why I say, again, in my opinion, I like to follow the money. I like to follow the revenue. I like to follow the growth. I like to work smarter, not harder. Something like SoFi, again, I was extremely confident that I was right in that call. But again, we know that nothing is guaranteed. So I can only, state my case. I can explain why I like something, why I don't like something. And then we just have to wait and see because anything can happen. We know that. So, of course, I try to relay a little more conviction on certain things that I see, but again, technically, we know that nothing is set in stone and anything can happen. So, we just have to look at these high conviction plays and hopefully we're right more than we're wrong. But something like SoFi, I think this is going to be a good quarter. And again, they got the Amelia acquisition now. We're in the healthcare sector. And I'm just personally seeing slow growth, market expansion. They're going to probably slowly absorb more and more of the market share for a lot of these other businesses that want to tap into some sort of voice AI assistant. So that's why I've been pretty bullish on SoundHound for a while. Again, I don't remember when we initially looked at it. Maybe it was like around here or something. Back, looks like early 23. We were looking at some technicals. Boom, the stock goes on a big run. And then we start to pull back and break supports here. This whole time it was sub 2. I said, in my opinion, these people are crazy. I'd be a buyer. You can see we were bouncing around. And then, of course, boom, we had the big explosion. So that's what I mean. People see this. And then they see this drop down to a very attractive price that they missed. And then they see this, which is why they want to see this. Because they missed it. So they want to buy it again at 2. The problem is, stock's been holding 4 like a freaking beast if you really look at it. Even when we dip down here, you can see 390, 388. We flattened out for a couple of days, and then boom, we shot right back up. We dropped to this bottom trend line here, 394, and then boom, the next day immediately shoots back up to above 4. Right? So it seems like it wants to hold that $4 level, which again is why I'm saying, even if we do have a breakdown out of this triangle, maybe it drops to 390-ish, and then we may bounce and have that momentum coming into those earnings again, estimated for roughly 4 weeks from today. And we'll probably do an update on the stock, maybe a little before earnings come out if we get any news. But again, I didn't really want to jump down anyone's throat, and I'm not trying to beat up like you meme stock people and whatnot, because again, the goal is for everyone to make money. So if the bulk of you are making money, then it's fine. But the fact that I saw this headline here, Cramer calling it a meme stock, I mean, honestly, that almost makes me like it more. And that was a real belly laugh. That's what this gave me. I was laughing from my belly when I read this. Because of all the piece of crap overvalued stocks out there, you put SoundHound in the crosshair and try to label it as a meme stock. Shame on you, Jim Cramer. After all those years of experience, you don't see what's going to potentially happen over the next couple of years, and you label this a meme stock. Breaks my heart. But that's pretty much it. So I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.